Good morning. This is Jovine behind the markets. Happy Monday. Today is Monday, March 24th. And today I want to follow up a little bit about the Fed minutes, a little mostly missed, but little known section on the Fed minutes where they talk about their balance sheet and why that is so important for investors who are very critically aware of what's going on and the challenges that we face. So I want to talk to you about it. And first of all, I need a little bit of historical context here. It used to be, remember when we were kids or young, we had these guns or butter policies. You couldn't have both. You couldn't have guns and butter, meaning military buildup and tax relief and all this other stuff. We forgot guns or butter, and we've been giving people guns and butter since the fall of the Berlin Wall, and we won the Cold War. Back then, politicians would have to choose between guns or butter. They'd have to make choices, real budget choices in Washington, because they couldn't do both. But some years ago, our politicians found out or discovered what I call the ultimate tax loophole. They realized that you could actually do guns and butter if you borrowed money to do it. The politicians in Washington would sit down and do their budget, and they'd say, we don't have to cut anything and make anybody unhappy. All we have to do is push this problem onto the Treasury Department, and the Treasury Department will sell bonds. We don't have to balance a budget. We could just keep running deficits. Total tax loophole. They're not doing anything. They're not following their responsibility as legislatures. They're sober, responsible, mature legislatures. They push these deficits onto the Treasury. The Treasury says, gosh, now you're running $1 trillion deficit. Now I got to go out and sell bonds. And that's what the Treasury Department has become, our chief bond salesman. So the Treasury sells the debt, but there are only so many buyers on the planet of our debt, especially when China is not buying it, Russia not buying it. So what happens when people don't buy our bonds? You guessed it. Our Federal Reserve buys the bonds, okay? Now, the Fed has 6.76 trillion of them on their balance sheet, on its books right now. The Fed owns almost $7 trillion of our bonds, okay? What they've been doing is letting $25 billion a month of these bonds roll off of its balance sheet, meaning that they just let the bonds expire when they come due. They just mature and they let it come due. And in the Fed minutes last week, what the Fed said is that we're going to reduce that figure from $25 billion a month to $5 billion. 25 is already modest, given an almost $7 trillion bond book on its balance sheet. They said we're going to reduce that from $25 billion to $5 billion. This is very important, and it's telegraphing a big message. Now, Larry Summers, former Treasury Secretary under Bill Clinton, a serious man. He might be under Clinton, but he's a serious man. Definitely not a snowflake. He got booted from Harvard because because of things he said that angered the woke child mob. This is a serious man, okay? And I know people that have met him, and then they say there's regular people smart, and then there's Larry Summers smart. This is a man who's on a different level when it comes to understanding financial markets. Brilliant man. But he said after the Fed statement, and I quote, "This should be getting people's attention as an alarming development," end quote. He further goes on, he's saying the move indicated the Fed policymakers determined there was, quote, "limited absorption capacity in the market for long-term bonds," end quote. Why is this a problem? So basically, he's saying the fact that the Fed can't let more bonds mature, off their balance sheet is an alarming development. Why is this an alarming development? And why do I agree with him? We have $3 trillion in government debt maturing this year. Add to that the $2 trillion in budget deficits we seem to be on track to run right now. And that means we're going to need to find buyers for $5 trillion in debt. I can see why they used to call us government Sachs, Goldman Sachs. Now, in the past, we'd find the buyers for the debt. They'd be out there, people selling into their company. But there's not enough demand right now for long-term bonds. And this is what Larry Summers is calling an alarming development. So this forces us to keep issuing short-term debt or have the Fed keep buying bonds. Now, we're in the middle of a trade war, okay? All these companies, you figure, well, we're going to add 200% tax on liquor sales for companies that sell booze in America from Canada or France. Okay, fine. Now, those companies, normally they sell $200 million worth of Jameson every quarter, let's say, hypothetically. They take that $200 million, they bring some of it back to Ireland. Then they take some of it and they buy bonds. So all these companies that sell products into the US take the money here, a lot of the money, and they buy bonds with it. They actually keep interest rates low, okay? But a trade war stops countries from selling products into America. That means they won't have the money to buy our bonds. So we are at a really interesting historical crossroads in American history. It is not a light thing. It's not a thing where this is serious. This is for all the marbles, all the chips, so to speak. We're at a very serious crossroads here. Our debt problem and spending problem is choking us in a way that is really limiting our capacity to act. And Washington is going to come up. We're going to really get to see how much of this they're really paying attention to, because they're going to come up with a budget. And if it's not really close to being balanced within reason, basically that threatens to spike interest rates up, really go crazy here. So our long-term bonds are not attractive because we're offering people 4.5%. It's just not enough money given the deficits we've been running. And it really seems like all of this is coming to a head. And if you want to know more about this, check out our book, Midnight in America. I wrote about it, this very thing leading up to all this last year. And I don't want to make this the Midnight in America series of videos, but this is not the Midnight in America channel, that's for sure. But a lot of those things that we talked about 6 months ago, 7 months ago, they're all starting to really unfold now. And it's important that you be aware of this. This is crack number one. Anyway, that's all I have today. Have a wonderful Monday, and I'll see you on the flip side tomorrow.